Okay, boys and girls, we're going to do an exercise in waiting. Oh, that's got you all excited, hasn't it? Well, it should do, because that's what actually makes or breaks your trade. So, let's play the intro and we'll get into it. And a warm welcome to one and all. First time here, big fella Scruff, and I'm putting trading in the real world. At least that's what I'm trying to do. And it's quite difficult because most people just want the magic pill. You know, they've got an over expectation of what the market's willing to do and all this different thing, and it's quite difficult.
They've done studies, 60% of the time it works every time.
That doesn't make sense.
But if you follow the path, and I've got to give it a little bit of an applause to Perry today, because he's taken his £200 challenge that we started earlier in the year. He's now got £1,000. There isn't a bank in the land could do that, not one. So caps off to him. He's outperformed the market. Now, if that's not trading, I don't know what is. Steady growth, boom, 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 following the path. Now, for me, my job's done. It genuinely is. There's a number of people gone on to better things. And if I quit today, I'm going to quit a happy man.
No way!
Because I've changed somebody's life. And trading can change your life. As long as you're prepared to put the work in. Don't get me wrong, most of you fail because you're not willing to. You put 20% of the work in. If you put 100% in, you get somewhere. So, let me flick this over and we'll explain. So the first thing I'm going to do is I'm going to come here. And I was talking to the guys this morning. A little salute to the Hobbit there. There's no trade yet on oil. So we'll look at this again at 11 o'clock. Again, waiting. But at the moment, pound JPY is saying wait. Now that means you can monitor it through the hour till it maybe comes to a key point to get in. You can't enter the market, but you can follow the market. Let me explain. So the first thing I can do now for the next sort of few minutes, because I'm not going to sort of reanalyze this for another 5-6 minutes, because I want to see a 15-minute close. Then I'll reevaluate the 5-minute and see if it moves on. Now, from a strength perspective, the pound is the strongest and the JP is still losing ground. So you could sort of say, well, the pound will buy because it's stronger than JP. Well, not quite. What it tells you is there's movement, but the problem is the movement isn't as far apart as you think it is. That hasn't changed. This has lost 2 points, but it's up the scale. That's mid-ground. Now, when I look over this side, yeah, that's lost 15 points from the last data source, but the pound is also losing ground, which might tell me its crown is over. Well, if its crown's over, that could be a change in sentiment. So it could be a sell rather than a buy. And what have we got? Sell. It's telling you to sell it. Now, from this perspective, what we're looking at up here is quite simple. And this is all about homework, guys. If you're looking for magic pills, or when this cross hits that cross, I go in, and when it gets there, I get out, I do 3-to-1 risk reward. Crack on. Because if that was so true, why do 80-90% of you fail? Think about it. Because 80-90% of what you know is absolute bollocks, peddled in such a way to make you think that it's easy. It's not easy. The charts are easy to read, but the hard part has been and always will be you.
Jesus Christ, dude.
You look for the least path of resistance, which means you fail. Put the homework in, and I can't stress that enough. So, what am I looking at here? I know there's no dominant direction, so it could go either way. Low time frames are telling me to sell it. The big time frames are telling me to buy it. And where you get your ideas from is telling you it could go either way. So by definition, you are scalping this. You get in and you get out bloody quick. What's the market doing at this moment in time? It's selling. So you're going to scalp to the sell side. The anchor, which is where I look for most of my trade ideas, is also telling you it's selling. So for the next hour, that's what I'm looking at. The grade is C. It's not the best. I like to trade A and B setups down here. It's telling me, because it's looked at the data, because I key a sort of formula into this, it's telling me it's risky. So I know it's going to be a tough trade. So it's telling me to keep the TP low. Minimum target on a normal situation would be 14 pips. So I need to be less than 14 pips. Probably 5, maybe half that, 7. Okay, so this sheet has told me quite a lot. Right, get out of the way. Cleared this down. Right, okay. Let's look at this hour. Now, if I look at a clean sheet, which I like to look at a clean sheet, you can start reading into it. I already know where the levels are because I've got it on my other screen. But there's levels inside of levels. Now, if I want to get into this in and out quick, the easiest and quickest way is just drop this in. It's coming out of that 38 into these here. Dead simple. It's a strong directional drive that hasn't been broken on the top or the bottom. So these levels all come into play. All of them. Now it's already been up to the 50, held the 50, and then come away and stayed underneath it. Well, if it's staying underneath it, that's a high probability it's going to go back to where it came from or the next level below. Well, if it's breaking that, the next level below is down here. Okay. What kind of target have I got? 63 pips. Right. I've just said I only want 7. Well, that's about as simple as it gets. So there's a trading arena I've got worked in from an hourly chart, an anchor chart. Right. Drop it down to 15 minutes to monitor this thing. What else have I got? Well, there's another drive. I can now time a scalp based on where the accelerant is. Came up, came down, probably started there, has got up to there, and again, we bang on to that level. So if I'm scalping, I'm getting out here. This one, just there. Okay, drop that up onto here, see what's going on. It's coming on to 14 minutes past, so this 15-minute candle is about to close. I'm going to reevaluate my sheet. So it's not difficult to do. Just flick that on. Just need to look at, say, a 5-minute chart to see what's happening. Look at a 5-minute chart so I can see it. And what I have is sentiment is to the low side. The guys will know what I'm talking about here. We have momentum to the downside as well. And we have strength to the downside. Now, this is changing the dynamic a little bit.
Well, we're waiting.
So we are changing now. So it is buy, sell, sell. Status is monitor. The grade is B. And it is sell, sell. So if I flick that back, it's changed its idea. This is waiting. So we've waited 15 minutes. It's now changed ever so slightly. But that slight change is up the grade. It's now a fair trade. So what about 10 pips? Maybe he's even go for the 14, 15. And we're ready to rock. So that's what we're doing. So do a candle count back. 1, 2, 3, 4, 5. Right. Drop an order in under the current candles. I'm going to go for 15 pips. Place the order in. Bang. Right. I want this kind of in this cluster. 15 pips gets me onto, well, might as well just target rough. Yeah, we'll just leave it there. Okay. I'm quite happy with that. So, let me kind of explain a little bit what I'm doing and why I'm doing it. It's not overly difficult. I've started out here on the hour. I've got a big idea of what the market is trying to achieve. I can see it's running against this particular move. It's holding below 50, giving me a sentiment of some description. Take it into 15 minutes. Now, over the course of the last hour and 15 minutes, because we started this at 9 o'clock. Well, it's actually before 9 when we were building this up. It wasn't ready, so we had to wait. And one of the signals said, you can't touch this till 10 o'clock. So I left it alone till 10. 10 o'clock, it just said, wait again. So I wait 15 minutes. At the end of the 15 minutes, I reevaluate the 5 minute just to see if there's any little tweaks, because the market will start changing around that time. And it's decided that, well, there's a little bit of a sell coming in. Because the big picture is all broken and fragmented, I cannot really go into this market full tilt, because it could go either way. So by definition, it's a scalp. Look at the ATR, gives me an idea of what the market's capable of giving, and then just trade what I see. And what I see is a downward push. And that's exactly what's going on here. So let me play it out, and I'll come back to you at the end. Okay, guys, that's the job done. There was a news announcement a minute ago, which caused a minor spike in the market. Was I worried about it? Not particularly. it wasn't really a major impact, but it was enough to fire the market into the scalp, and it was the scalp that was interesting. I was right to pull out the other order, and I was also right to target the way that I targeted, because even if a news comes in and it bursts away, well, the chances are it's going to push away before it goes into its major direction, and that's exactly what it did. It just slammed down. Did it go far? Not really, about 20 ticks. You can do that on a normal day if there's a version. Then it slams up. As long as it never broke this crescent, I wasn't in any danger. Breaks the crescent, well then I'm wrong, I take my medicine, and I just get out. Dead simple. But you might have also seen that there was an oil trade in amongst this, which was here. And again, that was called pretty much right. Look at the levels. Haven't got levels in the other one because I took them off because I wanted to build it up with fibs. But stall, 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 stall. All the way through. The levels that I put in are king. And I'll just make certain that I haven't got any tickets running. No. All right. So I've done 158 quid. I made the right call, or I believe I made the right call on this market. Because look, it's range bound. And later on, you'll see there's one of the trading clinic videos is about flat markets. How do you trade them? Well, you trade them the same way you trade anything. You just trade what you see. And then from there, you manage it. What's management? Well, management is where you place your target. Is it at the right place? Is it going to give you what you want? Where can you get out? Right? What's that for? Well, if you think about it, the stop has one job. One. And I don't subscribe to adding it to your trade. You know, people go, oh, well, I've got to put £10 in to get £30, so it's 1 in 3. Okay, crack on. I'll put 20 quid in to get 20 quid out because it's 50-50. It'll go 20 that way, it'll go 20 that way. It's an even call. The moment you start putting the odds in the favour of something, well, you're probably going to lose it. Why? Because probability is telling you it's going that way. No, it isn't, Scruff. Yeah, it is. It's why 80% of you fail. Think about it. If you're 3 to 1, it's 3 times more likely to stop you out than take you in. Then you have the argument saying, yeah, but I don't have to win as many times. No, that's very true. But you're going to take a lot of losses. Can you psychologically take those losses? Also, there are a number of elements at play. All stops have to be equal. A lot of them are not. All targets have to be equal. A lot of them are not. All conditions have to be equal. You run a trade 20 times. Those conditions are not the same. They're constantly evolving. So therefore, think of it in different ways. The stop has one job. Protect the account. The target has another job. Feed the account. Something for you to think about. Drop it in the comments. I'll be interested to see what you have to say about it. And as always, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.